Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for April 22nd, 2024. Well, I hope you had a great restful weekend because it's likely going to be a wild week ahead as we start off pretty light and then we're going to ramp up into some big data numbers that could be pretty intense in the price movement. And then, of course, we are going to begin the big tech earnings this week as well. So look for just about anything. Let's take a look at what happened overnight. We had Asian markets mostly higher with only Shanghai down, as China decided to leave its benchmark loan rates unchanged, and apparently that disappointed folks over there just a little bit, only down 0.67% overnight. And then if we looked at European markets here this morning, they are decidedly bullish here this morning, looking really strong with the DAX and the CAC up substantially here today, looking for a nice little surge into Monday morning. And then, of course, U.S. markets are also extremely bullish this morning, looking for a big gap up here this morning, particularly in the Dow and the NASDAQ, with a nice little push here. One of the reasons we're getting this little bit extra dose of bullishness is that we saw news this weekend that Iran made the decision there was not going to be a retaliation to the Israel very mild or modest response to the attack to Israel. So let's take a look. What else do we have going on here this morning? If we take a look at oil this morning, oil is down, so we're relieving some of that pressure here as some of that Middle Eastern tension maybe pulls back a little, teeny tiny bit. But if we take a look, oil down just 33 cents at 82.81 a barrel. Brent down 62 cents at 86.67 a barrel. And natural gas is down about half a cent this morning. Gold this morning is sharply lower, falling dramatically. Right now, at this very moment, it's continuing to fall this morning, down $42 an ounce this morning, or 1.74%. Silver is falling this morning as well, down 3.67%. Copper is just slightly higher. We've got platinum and palladium lower, which is interesting, with bond yields still going up. Crypto, on the other hand, that's showing a lot of bullishness here this morning, with Bitcoin up $1,300 an ounce. And we're pretty much green across the board there on those cryptos. Let's take a look at those bond yields here this morning. The 2-year bond coming in at 4.99% this morning, headed toward that, that 5 handle, which would be the highest we've seen in quite a while. If we take a look at the 10-year, that's pushing higher at 4.65%, and the 30-year bond at 4.75%. So after looking at all of that, what does that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do very much appreciate it. Let's take a look at these charts and see if we can figure out how we might want to approach the markets for today. And remember, everyone, that we want to shake off that bias. We want to look at the charts for what they are, not for what we want them to be. And as you can see here in the pre-market, we've got a nice little pump here in the diamonds trying to push up here. And you can see already breaking through this resistance here, this little consolidation resistance this morning. Now, one of the things I want to remind everyone, every day last week we gapped up. Every day last week after the gap up, we found immediate sellers and we pushed back down. Perhaps this week will be different, but you'll want to keep that in mind and just be really careful with this anticipation or racing in first thing in the morning, because you might get bit pretty hard here if we continue to play that game as they gap us here in the morning. So let's take a look. If we were to continue that bullish move, where would we go? Well, the first thing I would look at is a place right up in here. We need to attack that big old black candle high to see if we can break through that area. And you can see this resistance area here in the chart. Now, breaking through that area, if we can push up through there, then we have that chance that we're going to push up here into this bigger resistance area. And unfortunately, it gets even more intense once we push right into here in that chart. Now, those would be massive moves, and the reason I'm pointing those out like that is because I think it's still possible that we could do that because of the big tech earnings reports. There's so much energy tied up in those, and there's so much hype and hope that those big tech giants are going to save this market and bring us back up. And we know we can get some really outside moves, and we could possibly even trigger a bit of a short squeeze if those numbers are really strong. Now, if the bears happen to find inspiration, where are we going to go? Well, as you know, we hovered in here and we continue to hold on to this support level in the chart. If we were to fail here today, I would look for a retest to this level to see if we can hold. Beyond that, I think we're probably coming down to the lower side of this consolidation in the chart, which would be kind of a painful reversal if that were to occur. And there is a little teeny tiny area of support right there on those two little lows. Now, if we were to break beyond that, as you can see, the next area of real support is all the way down here. And you want to talk about a painful move. That would be very, very painful if we were to push down in there. You know, if we take a look at our moving averages, as I mentioned, right up here when we cross up into this next level of area of price resistance in the chart, that we've got a significant level of moving average resistance as well. So as we push on up, we'll want to keep an eye on that. That sets up one of our favorite patterns for shorting in right way options, and that's the blue ice failure, rallying right up into there, and then we would look for possibly that fade. So it's going to be very, very important, everyone, that if you want to be long this market on any time frame chart, make sure we hold a higher low. Wherever that higher low is, make sure we hold that higher low, because any relief rally back up can absolutely reverse unless we can hold that new area of support in the chart. So keep that in mind. Let's take a look at our SPY. Also, well, pushing up here nicely, but not near what the Dow is doing. And you can see in this gap up this morning, we're going to be kind of in a mid-candle pattern here in the chart to see if we can push through that next level of resistance. If we can, I'd be looking right up into here. And beyond that point, well, as you can see, pushing up into this area, we're starting to build up into more and more price action resistance in the chart, and we'll be coming closer into that downtrend situation here in the SPY that we'll want to be watching closely. Now, if the bears were to find inspiration today, I would say a retest of this low and this support in here would be the next area to be looking at. Beyond that point, we're probably falling down into here, and then I would suggest that the move could be pretty substantial beyond that point. As you can see, we've got a little bit of support right in here, but the bigger area of support is all the way down there on the SPY. Now, looking at our moving averages, as you can see, that rally back once again, the relief rally, and we're desperately needing a relief rally in the market. So not surprised that we're bouncing up here this morning. But as we rally back, we want to be watching that 50-day moving average flattening out and potentially rolling over, and all of these moving averages. That's where we could find that next wave of selling coming into the market. So watch that closely, and remember, as we gap up this morning, we have had day after day after day a gap up opens, and then immediately we find some sellers. Today, I don't know if that's going to be the case, but make sure you're prepared for that possibility. QQQ had a terribly rough day on Thursday, and I know as I was marking these price levels down in the chart, no one thought that there was any chance that the NASDAQ could fail that hard down here, but we certainly did. And as you can see, gapping back up here this morning, we're looking at some resistance levels here in the chart and the mid candle here that we'll want to be paying attention to. Beyond that, we'll be pushing into a fairly strong resistance area in the top of that black candle. But remember, big tech earnings starting midweek could really, well, we get Tesla tomorrow, but could really help us pump this right back up into these areas of resistance. And remember, coming up into here, we're starting to reach into some pretty big price action resistance in the chart. Now, if the bears were to find inspiration today, well, I would suggest right along that bottom side of that candle is where we could go to retest some support. Failing back down through there, well, this gets pretty ugly in here. As you can see, if we were to drop below that level, I think the next area down is probably down here, and beyond that point we may come all the way down into this area of the chart in the QQQ. Sorry, that's not very straight, but you get my point. We're really starting to put on some serious pressure here in the NASDAQ. Once again, on any rally back, we're going to want to be watching these moving averages as they're starting to roll over to the downside. Notice our 50-day moving average is turning lower here now. So any rally back, we'll want to watch that as just a relief. And then if we look at our IWM, old IWM, also feeling quite a bit of pressure here overall as we have sold off the last week. Pushing back up here this morning, looking for that nice little pop. You can see Friday it held in there bullish. So pushing back up, I've got this downtrend right in here, this break. We'll look for this zone right in here for some resistance. You'll notice we got some price resistance right through there to see if we can push up, and if we can get through there, maybe we push on higher into this level of the chart, and then right up into that downtrend is where I'll be watching for a significant level of resistance. If the bears were to find that inspiration, we'll push back down here this morning to test Friday's low would be the place I'd be looking for, and then beyond that point we're probably coming on down into this area of price support in the chart. Now beyond that, it gets pretty ugly because we start looking at some levels down in here that could really start to pressure the market substantially. So watch that carefully in the Russell. Once again, our moving averages flattening out, starting to cross down here, as you can see, and we're really close here in the IWM, the test of the 200-day. After a relief rally or whatever we get here, if we don't just pop and drop today, watch carefully for that possibility that we would come right down into that 200-day moving average as a test of support. Let's take a look at our VIX. Now our VIX on Friday, well, really gapped up here on Friday and then pulled all the way back, but I want you to notice we didn't break down below this little price support here in the chart, and we're holding in this area, as you can see, above 19, well, just about 19 handles in the chart. So if we can hold a support level in here, that's going to be critical for those bears. If they can hold that fear level, any rest or pullback in here would set up that next opportunity to the upside. Remember, if the bulls can push down through, one of the first areas we need to see them break is we need to see them break this upside trend here in the VIX, pushing us back down through that area. And it's certainly possible with the big tech reports coming this week if they report very, very well. So watch those. A little bit of volatility this week. And well, I shouldn't say that way. Probably a lot of volatility this week. And it's going to get even more intense as we move into the end of the week. Let's take a look at our T20s. Our T2122 had a little bit of lift here on Friday. Let's get to the daily. Came up off of that bottom, pushing up nicely here into the close on Friday. Now that was mostly the Dow and IWM. Obviously the QQQ and the SPY had pretty rough days. So there was a rotation out of some of the big tech giants, and they were pushing it into other areas of the market, trying to find a place to park some money. And you can see kind of stretching up here, breaking through that bullish reversal zone here. Now we look at if the bulls can continue to push. Well, we certainly have lots of upside opportunity for them, but we have to remember that we have also opened up a downside opportunity if the bears were to find something to key on and push back down, particularly, let's say, bond yields, could cause that pressure pushing us back down. So watch that close. Our T2108 did turn up on Friday, continuing to try and push up. Notice that we're in here at about 30%. We're going to gap up here this morning and probably gap through this area. Notice there's some price resistance in this area. So gapping up and pushing up through here, the next level of resistance would be up in here. And then the key area here in T2108 is we need to get back above 50%, having 50% of our stocks above our 40-day moving average. So we've got a lot of work here to do in T2108 to really turn this around bullish. So remember, all we've got so far is a relief rally. And then if we take a look at our T2107, a nice little push up there on Friday. This held above its 50%. So a little more than 50% of the stocks holding above their 200-day. So that's a good sign if we can continue to push up and push up into these congestion areas of the chart. And I would look for a pretty good move here this morning. We'll have to see if it holds throughout the day, if we can continue to hold that, particularly if bond yields continue to go higher. If we take a look at our T2101, well, our T2101 on that bullish move on Friday, our breadth declined. So we'll want to watch that carefully. We need to see the bullish side breadth really pick up. We haven't seen that here. Well, we certainly didn't see it on Friday. It was the sell wave that brought the breadth into the market. What we'll have to watch here pretty carefully is if those bulls continue to push this morning and we have breadth declining, that wouldn't give us a whole lot of encouragement as we push toward those moving average areas and price resistance levels in the chart. We could see that weakness maybe coming in. Perhaps big tech earnings can help us out there quite a bit. We'll want to watch carefully for that. Let's take a look at our economic calendar here for today. And our economic calendar, well, we're going to start off this week with not much happening here. We've got a Chicago Fed National Activity Report. We've got a 3 and a 6 bond auction that we'll want to be watching. And that is the size of it. But we build over the week. As you can see, we've got a PMI composite, new home sales. One of the things that's nice that notice in here, there's no Fed speak. We don't have any Fed speakers in here this week, it looks like. That's a nice relief. But if we go beyond that, we're going to get durable goods coming in here on Wednesday. That is a pretty substantial report to pay attention to, and petroleum status. But here's where we get a little bit wild, and that's going to be GDP coming in here on Thursday. There'll be a lot of anticipation and worry over that throughout these 3 days, so pay attention carefully. We've got international trading goods and, of course, those jobless claims that continue to be really problematic for the Fed in bringing that inflation down. And then, of course, on Friday, we get our Fed's favorite number, and that's the personal incomes and outlays number on inflation. So watch that closely. That's going to raise a little bit of concern as well as we wait for that at the end of the week. And then we've got a consumer sentiment number that will be coming in as well. Let's take a look at our earnings calendar. Now, our earnings calendar today is more of a busy one. We've got a little bit more going on. And by the way, guys, I haven't been doing that blog since I had that foot surgery. Things really slowed me down on getting some things done. But I'm back to trying to get the blog out this morning. So if you want the full list of notables, make sure you click the link just below the title of the video. That'll take you back to the morning blog. And actually, all of the things that I'm going to send out this morning will be links to take you to the blog, and then you'll go and you'll look for, down at the bottom of the blog, there'll be the link to the morning market prep video. Let's take a look here for this morning. We've got ACI that will be reporting. Looks like we have a little pop and drop going on that this morning on its report. We've got AZZ coming in here today. We've got BOH. We've got TFC this morning. We've got Verizon. Nice pop there this morning on Verizon. Nice bullish move. And we're going to hear from Zion Bank here on the regionals. That's also getting a pop here this morning. As far as the afternoon reports, guys, I'm going to ask you to go to the blog to catch those. We're going to start ramping up. Too many for me to cover in the morning market prep video. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up, so you'll be notified every time I post a video. If you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. That would help an awful lot. And then also, if you find this video to be worthy, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. Those comments can be, pretty much anything. Emojis count as engagement, and that's what it's really about. YouTube's algorithm is, as long as people are engaging with the video, they'll show it to more folks. So thank you, everyone, for those who take the time to do that. I truly, truly appreciate it. Also, thank you for everyone who shares these videos. Just click that link to copy the link and post it on your social media feed. That helps us reach more people. Then also, thank you to everyone. A huge shout out to everyone who supports the channel through the Buy Me a Coffee link. Thank you very, very much for that. I do truly appreciate it. Let's take a look at some of these charts that could be setting up. Remember, these aren't recommendations to buy or sell any security. Do your own due diligence, and then be very, very careful as we approach this market today. Expect considerable volatility. Note that the VIX was really high. When the VIX is high, all of your options are going to be higher priced. So we're paying more for the extrinsic value or the time value of those options. And with the volatility that we're seeing, odds of winning trades diminish when that volatility goes way up. Even the best technical analysts can make some serious mistakes by over trading a volatile market. So let's take a look at a few things here this morning. First, I want to make a point of the dollar, UUP. Take a look at the dollar gapping up here this morning, trying to push on higher. We got a little pop and drop going on. We did fill that gap in here on the dollar. Let's watch that closely. We're holding a nice little upside trend here in the US dollar, and as long as those bond yields continue to go up, I would expect that to continue to move to the upside. So watch that carefully. Now what that means is we typically see energy prices fall on a stronger dollar. Any commodity prices fall on a stronger dollar. And the interesting thing here is that we've had gold, silver, precious metals, things like that really moving up with the stronger dollar, and even holding in there on oil. Now maybe some of the little bit of easing in the Middle East tensions could help this continue to pull back, but you can see right now in the energy or oil producer companies, we're seeing a little bit of bullishness. We saw that on Friday. today, and they're trying to push just a little bit this morning in the pre-market. We could still see some of those oil companies moving up, and part of it might be anticipation of earnings, but watch that closely. And you can take a look here. We've got stocks like ExxonMobil holding in here nicely, stocks like PSX. There we go, Phillips 66. It's kind of given up that trend here, so we've got that mix of things going on here in those charts, but I would watch those closely. Now, when it comes to the metals in here, well, gold has been very extended here, and finally this pullback looks like a healthy thing to me, that this needs to rest, pull back, maybe find some support and trend in here. So watch that closely as this rests or pulls back. Same thing with silver. Silver was really testing for this big breakout here in silver. Now pulling back strongly this morning, and I would be looking for maybe coming back into this trend, coming back into a level of price support in here, so catching a little bit of rest on that. But we're not seeing the same thing when it comes to copper. Copper is being really strong, and there's a reason for that. We're building all of these EVs, we're doing all of these charging stations, and we're burning through lots and lots of copper supplies trying to do that, and so we're seeing copper continue to hold pretty strong. Now, I would point out here in FCX we have a big resistance level in the chart, and we're getting this nice little resting pattern in here. We have slipped beyond that really sharp upside trend, but I would look for that next opportunity. Even with the dollar strengthening, this could start to push on through to the upside, so keep an eye on copper. Stocks like SCCO, there's plenty of copper plays out there to be paying attention to. If we can hold some of these support levels, I would keep a close eye on those. Let's take a look at a couple other places. Take a look at Tyson. Now, normally you wouldn't see food commodities moving to the upside when the dollar strengthens, but we've got this bad situation going on where our inflation continues to move up. As a matter of fact, we were even called out by the United States was called out by the International Monetary Fund, basically suggesting that the administration is fighting the Fed here and continuing to push these rates higher with that overspending. So as the dollar goes up, we're seeing inflation push some of these prices higher, and you can see in Tyson we might be breaking through that resistance in here and pushing to the upside. I would watch that pretty closely, that possibility that that could continue to move on higher. And if we take a look at Hormel is pushing into that resistance area as well, trying to push on through. We'll want to keep an eye on that area of the chart. And we can take a look at just things like Kroger, groceries going up, and Kroger holding that support level up here, and that possibility that we could push on higher here in Kroger. Take a look at some of the defensive areas like Kroger. Take a look at PepsiCo. PepsiCo had a really good run to the upside last week. Any rest or pullback would set up an opportunity there. Coke had a nice sized push to the upside. I think that's worth keeping an eye on. Keurig Dr. Pepper, let me see, DP. Keurig Dr. Pepper made a nice move, pushing up in this trend, breaking through some resistance. So now any rest or pullback in here, I would look for that next opportunity. Notice this is a downtrend break and a hold of a higher low. That's what I'm looking for in a chart. And I would keep an eye on some of those. And I even saw things like MDLZ, Mondelez, trying to come up out of the downtrend. We've got STZ, Constellation Brands, trying to push up. That was a big move on Friday and finally pulled back. But as you can see, pressing some resistance here in the chart, and that opportunity that we might start pushing on through on some of these more defensive sector areas of the market. Let's take a look at retail. Walmart struggling here just a little bit. As you can see, we made a lower high. We were in this little wedging pattern, or possible wedging pattern, and then we just kind of slipped down below. Any rally back in here looks to me like an opportunity that it could set up short. Keep an eye on that. Even though we're a ways away from those earnings, retail might be having some trouble here. And Costco also showing us that little concern here in the chart. We ran up, breaking through into this resistance area of the chart, but if I run a trend line down this area, we're running into that lower high possibility of resistance, and notice we pulled back and broke that support again. So we'll want to watch this carefully. I think any rally back in here, I would be watching for that potential short to the downside. Now, taking a look at other stocks in here, if we look at well, what happened here? I was looking for the Gap stores, and for some reason my ticker isn't working. It's GPS, that's why. Wrong symbol. Gap stores showing some negative here to the downside. Breaking down below some of that support here in the chart as well. Any rally back, I would look for a little bit of short there. If we take a look at Under Armour try to get a little bit of a pop here off a bottom. This has just been pushing down here into this bottom. Now this is one that may have that opportunity to push back up here just a little bit. If we can break that downtrend, maybe hold a higher low up in here, we might look for a little bit of upside in there. Now, taking a look at some of the big techs out here, remember guys, we've got Tesla that will be reporting tomorrow, and Tesla moving lower here this morning on some cutting of prices. Competition is really getting hard here, and demand for EVs is dropping pretty substantially, and as you can see, dropping through some support here. I would watch that carefully here in that chart. And Kathy Wood's ARC Innovation seeing a lot of pressure here as a result, with Tesla being its #1 holding, continuing to push down. If you want an inverse on that, we made some money on this last week in SARK, pushing up a little rest or pullback in here. This is an inverse on ARC Innovations, and notice we broke through this resistance. So any rest pullback that comes back into this trending area, I would look for that next opportunity to the upside. And I'm going to say the same thing about these inverse ETFs. Keep an eye on those. We broke through some downtrends, major push to the upside. Any rest or pullback in here, I would look for that opportunity for the next long in those. And I know not too many people want to hear that. They want to hear that we're going to zoom back to the upside. But we have certainly got some bullish patterns here in these inverse ETFs that I would be watching for, as long as they don't trigger some kind of big short squeeze, which is possible with the big tech earnings reports. These could still come back into those support levels, so I would watch those carefully. So there's a few stocks for you to look at today. Thank you so much for being here today. I want to wish you all of the best. Remember, going to be kind of maybe a little bit of a uncertain day today. Look for some pops and drops. Look for that possibility of a substantial whipsaw on this gap up this morning. Protect yourselves. Be careful, because as we move through the week, the volatility is likely to go up. I want to wish you all the very best, and I will see you right back here bright and early Tuesday morning. Have a great day, everyone.